What's up, guys? Today is March 4th, and we're going to take a look at Abercrombie and Fitch after their earnings report earlier this week. We're going to break that down for you and talk about how we're wanting to trade it this week going forward. My name's Tom. I'm the Action Accountant. I've been value investing for the last 15 years, and I'm excited to share my research with you today. Abercrombie Fitch just reported earnings on Tuesday, March 2nd, and has had an incredible Q4. All that to be said, if you take a look at this week, their stock is pretty flat, and they posted some really good information, but the stock hasn't really moved based on earnings. Big picture, if we look at their overall chart, Abercrombie & Fitch has recovered nicely. It's even tripled since the Corona crash of 2020 back in March. So it's down from a little bit under $10 a share all the way up to $28.50 today. And nearing not all-time highs, but nearing 5-year highs, which is really good, obviously, if you're a company in retail space at this point in time. So let's talk about their earnings real quick, shall we? I'm referencing right now their earnings call transcript, which I've read through earlier today, and just kind of breaking down some of the highlights for you. At a high level, you're going to see year-over-year revenue decline. So that means their actual sales went down. They went down about 5% year-over-year. Now, if you compare that to a lot of other companies in the industry in 2020 in Coronaville, that's really not that bad. Along the way, though, they increased profitability for Q4 specifically, which is the quarter we're talking about, which for them covered November, December, January. And they actually saw a growth in earnings per share from $1.25 to $1.31. Now, some of that earnings growth can be explained from a foreign exchange transaction, which yielded them $15 million benefit. So if you really back that out, then it's not necessarily as good. However, back to being in the fact that they had multiple stores closed down, they didn't have access to everything. They were able to outperform a lot of expectations and a lot compared to a lot of what other retailers went through. Some things that are pretty cool over this last year in 2020, they've been able to increase their sales, online sales, up to 53%. And then they've also, in terms of, this is somewhat negative, but has a positive impact on earnings, they have closed down a handful of unprofitable stores. I believe that number to be 28. I think is what they were talking about. Big picture, if they are able to shut down unprofitable stores, transition things over to e-commerce, and keep driving high margin items, you're going to start seeing long-term earnings growth. Now, unlike other retailers that we've talked about in the past, their margin is really healthy. They're working with a 60% gross margin, which is actually up from last year. That's incredible. Another thing that was pretty cool is they alluded to their influencer, and basically they have been growing their influencers throughout the year. And as you can imagine, with something like Abercrombie & Fitch, they're a perfect match for influencer marketing. In my day job, we're working with small brands, and we like to use micro influencers to help people see something that's, hey, this is a cool product that's out there, and you're trying to capture people in the real world. With something like clothing and something with the name like Abercrombie & Fitch, they're going to be able to capture any influencer they want, whether it's micro to macro, hundreds of thousands of followers, and that's going to help drive traffic back to their website, which you're starting to see at a 53% revenue share. I really like Abercrombie going forward. They are growing earnings. They are being effective with their money, and I think if you're going to see a continued upward trajectory through 2021, just due to all those efficiencies. One more thing that they did announce as part of this earnings call is a buyback program, which of course I can't find right now. But they had suspended their dividend last year in order to conserve cash. They have not reinstated their dividend. It's probably wise. They're still just trying to make sure everything's stable as they go forward. But they did announce that they are going to start buying shares back. Now, it wasn't a very big program. It was in the substantial amount of money, but not like billions of dollars. As of January 30th, so that's 2 months ago, they have the ability to repurchase 3 million shares. And this was a pre-approved program. They're just restarting it. I don't think that they have actually started to do that as of this moment. However, the fact that it's available and as they're starting to earn more free cash flow, that's a positive for the stock going forward. Anytime the company is buying their shares back, they believe that they're providing value to their shareholders and they're allocating capital towards increasing the price of the share by buying shares back and decreasing the number of shares outstanding. All right, let's break down what I traded this week, and I'll be honest with you guys, this was a blow up, non-profitable trade. I lost money, even though I was correct. Um, Options went against me, and I blew up. That's okay. These things happen, and we want to learn from it and go forward. So I personally purchased 27.50 strike price call options for this coming week. I bought them on Monday, expecting a really good earnings report. Sure enough, good earnings report came out, and unfortunately, this price of the shares went down. They had been trading at about 28 going into the earnings, and it traded all the way down to 27 after earnings. And the premium that was provided from the pre-earnings option contract completely melted, and this is where we're at. Beginning of the week, we were trading here at 28. After earnings, it melted all the way down to 26 and kind of bounced around there for quite a while. And then nice little spike up today, and then it just can't really make up its mind what to do with the rest of the market. All that to be said, I of course closed my position here yesterday, probably at the worst possible time, and took a really big 60% loss or whatever. All that to be said, just walk around what I did. I purchased a call option for $27.50, expecting to see a good earnings report and a run up in the share price. Of course, that didn't happen. We had a run down of the share price, and that caused the option contract to go from $1.60 or so all the way down to about 40 cents as the price eroded. So I learned an important lesson on options trading, which I am not an options trader. I'm just learning as I go. That I substantially overpaid on the premium side of things, and when that premium eroded, yeah, the price, even though it went up a little bit, didn't move very much. That premium I paid wiped out, and I was kind of left with just the time value and the gamma value. So the Greek value left, and the above and beyond premium disappeared, and I took a loss. So right, first things, the correct way for me to have traded it would have been, I believe in this stock, I potentially should have just bought shares, or a secondary trade that I did make was I sold a put to buy shares, and that actually did successfully close at a 100% premium gain. I sold 25s, a put, and I sold them for something like 40 cents, and I bought them back for 4 cents. So I was able to take a suspicion that the stock wasn't going to crash. It stayed flat or went up, and I was able to close out my trade profitably there, so to offset some of my loss. Now, looking to go forward, I'm gonna continue pressing on with my selling strategy. I'm not gonna be buying more puts or calls at the moment. ANF is at a 5-year high, so I am a little bit cautious about how much more room does it have to run. I think it does have some decent amount of room to run. It's getting healthier. Its balance sheet's improving. It's going to replace its worst quarter probably of all time next quarter, where it had a multiple dollar per share loss, and it should have a nice break even or slightly above break even quarter as it's continuing to improve its its operations. So I'm looking at next week selling a 27 or 26.50 put to potentially buy shares at $26 if the price of the shares went all the way down to this point. The way I came to that conclusion is I'm looking at ANF. I like bar chart, and this is something that we can review later in a different video. Bar chart gives me really quick access to solid charting information. Hey, where's it at? What's it been doing? Some technical indicators, access to your fundamentals, and my favorite, access to key turning points. So you can find really easy access support levels, resistance points, and where you expect the company to be floating. When we looked at this earlier today, it was trading at 27, or I'm sorry, right around 28. It was like 27.90, and it was just kind of going up and down right there. And I called out, hey, it's either going to move down towards 26.75 towards the support, or it's going to move up towards its resistance. And that's kind of what happens just in a general trading day, in a trading window. It's going to move between these 2 points until it finds a new support, and a new resistance level. So I was wanting to sell 2650 puts, which is right below the support, to capture a 1% premium on my money, on my cash that's being tied up, with the hope that if it fell that far down, I'd be pretty happy because I'm getting a pretty good deal on ANF, and then I'd look to start selling it at 28 and 29. So I'm gonna go ahead and go through that real quick. Go through that process. I believe I have an outstanding transaction, but let's go ahead and make this trade on stream. Placed. Cancel. All right. So the way you do that, I'm on Robinhood. You could do this on Schwab. We could do this on Webull. But you're gonna pull up your underline. So ANF. You're gonna look at trade options. If we were on Schwab, you'd pull up your underline ANF. And on Schwab, you're going to look at your options chain. Same thing with here. You're going to trade ANF options. In my case, I told you I wanted to sell a put for next week. Looking at 2650. I'm happy to make a little bit more than 1%. So I'm going to try and sell these for sell. Lots of downward selling pressure. And you're going to start seeing these trend closer and closer to each other as buyers and sellers are trying to find an agreement. If you want to go through the same process on Schwab, you pull up ANF, click on the options. Here you can see the option chain. We're going to click on the full options chain because we want to see all dates, all times. Robinhood's methodology to display is really good, but in the exact same way, we looked at March 12th. We want to show 16 strikes because we want to be able to see everything, and we want to go back to 2650, and you can see the same information. There's a 25-cent bid, a 35-cent ask, so that's someone's willing to buy it for 25 cents, someone's willing to sell it for 35 cents, and you have to find the happy middle ground. The last trade was for 44, and then you can go in and trade it from right here. And of course, Schwab has a completely different interface than Robinhood, but it's the same information. It's all the same information. Here's your underline. Here's the date, strike price. Are you selling a put or a call? And are you buying it or selling it? So I'm selling open, 1. You can just say, give me a market order, and it'll just find someone in the middle. With options, you generally want to do limit orders. Very rarely do you want to do market orders because it will give you the worst price possible. And usually you get paid by being patient. So that's the big thing with that. With all that information, we can complete this transaction, and we would be holding we would have sold the right to purchase Abercrombie and Fitch at 2650 on March 12th. And if on March 12th, Friday, March 12th, the shares of Abercrombie and Fitch are under $26.50, I will have to purchase 100 shares of Abercrombie and Fitch. And whoever bought that option is able to sell them to me at 26.50. And whoever owns that option, so the buyer, has the ability to exercise that right within their trading platform. And generally speaking, if it's a profitable transaction, your trading platform, Schwab, Robinhood, Webull, whatever, will force that transaction to happen because they don't want people to just forget to click a button or whatever. So that's how that works. I think for right now, that really explains what I thought about Abercrombie & Fitch, how I'm trading it going forward. I like to buy in at 26.50 if I'm able to. I'm selling puts to get there. However, if you're on for the ride and maybe you don't have $2,600, I do like Abercrombie going forward into this year. Their quarter-over-quarter growth is continuing to be strong. Their earnings are continuing to be strong, and you just want to look and wait for a good entry point in the 27 range. Again, I'm Tom, the Action Accountant. Hope you enjoyed this breakdown. We'll talk to you next time.